Good morning, students. Namaskar, Swagatam in our today's session. Today we will be discussing the remaining provisions of residential status. That was chapter number 2. So I believe you must be studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So my future chartered accountants, today we are in our income tax session. In last session, we have covered the residential status provision regarding a company, a partnership firm, etc. HUF provision, we have completed a substantial part of it. But still there is something left, which is how to find out the HUF status after being resident. It depends upon the Karta. And we have left because we have to complete the individual provision in it first. Then we can move on to that HUF concept. In the individual concept, we have gone through with the provision of normal resident or deemed resident. In case of normal resident, there were basic provision. In case of normal case, if that is not a special condition, then in normal case, you would be a resident if you fulfill any of the basic condition. If you do fall in special cases, like there were 3 special cases in option B. In 3 cases, if you are a citizen or you are a POIO citizen, if you are going outside India, if you are coming into India, if you have a certain total income from Indian resources, then there are certain conditions you have to fulfill. So if you are able to fulfill either normal conditions or a special condition, you would be a resident, else you would be a non-resident. There is a concept of deemed resident also in section 6(1)(a), which we have completed. After becoming resident, even as a normal resident or deemed resident, we have to find out whether we are a resident and ordinary resident or we are a resident and not ordinary resident. Deemed resident will always be regarded as not ordinary resident. And in case of other, we have to check certain conditions. Like there were certain conditions, there were 2 conditions for normal case resident, normal conditions, and for B case, category 1 and second person was having 2 conditions. And for category B, third case, there were 3 conditions. If either of these conditions has been fulfilled by the individual, he would be regarded as resident and not ordinary resident. And if he does not so, then he or she would be regarded as resident and ordinary resident. There were 2 concepts left. One is related to illustration number 1. I have given you homework for illustration number 1, 2, 3, 4. And I believe you may have some problem in illustration number 1 or illustration number 4. Because illustration 1 is connected to a special case which we did not cover at that day. And special condition, illustration number 4 is connected with HUF provision, which is yet to be discussed. So first of all, I will discuss that HUF provision, which need to be completed. After that, that special cases of crew member of Indian ship, which is related to illustration number 1. After that, we will discuss illustration 1, 2, 3, 4, because 1 and 4 is connected to some provision which we are going to discuss today. Okay. So good morning once again to all of you. Of course, before starting the class, there would be a thought for the day. There would be an MCQ test also before ending this class regarding residential provision. And of course, a small story, but let me see if there is any query. Okay. Good morning, Ajay. Yes, Anshul is asking illustration number 1, departure date and arrival date of person is not included. Yes, it's my mistake. Actually, I gave that illustration number 1, which is connected to the provision what we are going to discuss today. Actually, in case of crew member of an Indian ship, Anshul, the day of departure and the day of arrival is having opposite provision as per in normal case. That means the day of departure and the day of arrival is to be included as outside India. In normal all cases, we include those days as stay in India. But in case of crew member of an Indian ship, those days are going to be included as stay outside India. So that was the illustration number one concept. But we will discuss that illustration provision, and then we will solve that illustration right now after that thought for the day. Shalini, good morning. Lakshmi, good morning. Satish, good morning. Good morning. Linda, good morning. Harivansh, good morning. Hina, good morning. Hina has some doubt in illustration. Number 1, 2, 3, 4. We will discuss all 4 illustration. Let me just complete the HUF remaining provision and that special Indian ship crew member provision. Okay, Hina? Pranav is saying, sir, if individual earn more than 15 lakh of agricultural income, then will he be deemed resident? Agricultural income is not included in our tax provision. So in that case, that would not be so. What is difference between section 61A and section 61? We have discussed that, Harivansh, in detail in the last session. You can go through on the last session, scroll back, and you will understand the difference. In section 61, I have also explained that there is no requirement of visit under section 61A. If you fulfill that condition of 15 lakh, etc., you will be automatically deemed resident. But in other cases, there should be a case in which you should visit India for at least some days as per the provision. Good morning, Shireen. Riddhi Ben saying good morning. Mustafa saying very good morning, sir, and good day. Thank you, Mustafa. Same to you. Archana, good morning. Yes, Hina, we will discuss the illustration. Don't worry. So before starting the class, Shamli also joined. Good morning. Today is the thought for the day, and I believe you all must have read this thing, already read this quotation sometime in your life, and it says, this quotation is very, very powerful and very, very true about this course, what you are going through, your CA course. You should arise, awake, and stop not till the goal is reached. So Shri Swami Vivekananda actually said this thing, and arise, of course, does not mean or awake does not mean the normal wake up you do in morning. It's about wake up and arise for your future. And until it is achieved, your goal is achieved, you should not stop. So the aim should be completed. Time does matter, but until you get whatever you want in your life, you should not stop. You have to achieve what is your goal in your life. So please arise, awake, and stop not till the goal is reached. That was the thought for the day. Moving on to the provision of HUF. And in the last class, I believe you must have gone through with the chart also, which has been uploaded on the portal. And if you have gone through that chart, I believe you must be feeling that provisions are not that complicated, because that chart has been explaining each and everything in a single place. So when we were discussing the provision of individual, if you are a resident or deemed resident, if you're a resident, we have to further check whether you are a resident and ordinary resident, or you are a resident or not ordinary resident. So I am going to discuss a very logical thing with all of you, and I believe you will understand very easily what I am going to explain you right now. In case of resident or not ordinary resident, there were 3 specific cases. In first one was A case, and B condition 1, condition 2. Second was B condition number 3, and third was deemed resident. So this is automatically resident and not ordinary resident. Now in B12 or B3, there were 2 conditions in case A and B12. If you are less than 730 days in India, in 7 preceding previous year, or if you fulfill this condition, you are in India for more than equal to 9 years non-resident out of 10 preceding previous. Clear? We have discussed this condition. Now help me in this case. If I want to ask you, if I'll ask you that please reverse these condition in opposite manner. Like tell me those situation or that situation in which this condition would not be fulfilled. So if you want to fulfill condition number one, you have to be in India for less than 730 days in 7 previous year. So if I'll ask you that please tell me the situation in which this condition need not to be fulfilled. Like if you this condition does not fulfill, you would be a resident and ordinary resident. So if I want to ask you when a person would be a resident and ordinary resident, he or she would be a resident and ordinary resident if they will not fulfill first condition as well as the second condition, because either of one if had has been fulfilled, he or she would be a resident and not ordinary resident. तो मैं सिंपल लैंग्वेज में आपसे क्या पूछ रहा हूं, आई एम जस्ट आस्किंग यू वन थिंग. सपोज ये this is what we have understood what is the meaning of resident and not ordinary resident. So if I'll ask you when this condition would not be fulfilled, when these two conditions would not be fulfilled, you would be a resident and ordinary resident. So when this condition would not be fulfilled, the first would be the reverse of this. If you are 730 and more days in 7 previous year in India. Understood? So there is no new condition. This is not a new condition. Technically, we are just understanding if if you want to become a resident and not ordinary resident, you have to fulfill any of these two conditions. But if you become a resident and ordinary resident, then in that situation, this condition should not be fulfilled. So what should be happen? That you must be in India for more than or equal to 730 days in 7 previous year. So I am not writing any new condition. I am just writing the reverse of these condition to tell someone when you would be a resident and ordinary resident. For example, you have learned these provision. Then when a person should be a resident and not ordinary resident. Clear? If someone comes to you and he wants to ask, okay, now tell me the definition when I could be a resident and ordinary resident, then I can explain him like this also, that if you did not fulfill these two conditions, you would be a resident and not ordinary resident, or resident and ordinary resident. Or I can explain like this also, that if you are in India for 730 or more days and these two conditions both will be fulfilled. And what should be the reverse of this condition? When this second condition would not be fulfilled. If you are 2 years or more resident in India out of 10 preceding previously. So if you are in India resident 2 years or more, you would be automatically not a resident and ordinary resident. So technically, I'm just trying to explain you the reverse of these two conditions. Why I am doing so? Why? Because HUF need this thing. Now, when we discussed the provision of HUF, the concept was control and management. And it says if wholly or partly it is in India, HUF would be resident. If it's wholly outside India, then HUF would be non-resident. If HUF become resident, then we have to find the subclassification of whether it is a resident and ordinary resident, or it would be a resident and not ordinary resident. And we have to see the condition. We have to check this condition on Karta. And what are the conditions? Exactly these two conditions are there. So if Karta is in India for more than 730 days in 7 preceding previous year, both conditions should be fulfilled. Because if any of these does not fulfill, that means both of these conditions should be fulfilled. He must be in India for more than equal to 730 days in 7 preceding previous year and 2 years or more resident out of 10 preceding previous year. So if he does fulfill both condition, both, then HUF will be regarded as resident and ordinary resident. And if he does not satisfy any of these condition, any one of these condition, HUF would be regarded as resident and not ordinary resident. What I was trying to tell you that when you are studying these two conditions, so it does not bother why I do need to learn these two conditions. These are not new condition. These are just opposite of these condition. In resident and not ordinary resident, if these two condition does not fulfill, then you become a ROR. Technically, that means if you do not fulfill these two conditions, technically you are fulfilling these both conditions. So think like that. There are not new conditions. They are just the reverse of explaining what is resident and not ordinary resident. How you won't be a resident and not ordinary resident. So technically you would be a resident and not ordinary resident if you fulfill these both conditions. Understood? Because in HUF, they did not explain what is this. They explained what is resident and ordinary resident. That's why we have to learn these two conditions. Suppose in theoretical provision, they ask how a HUF will become a resident and ordinary resident. Then you cannot write like this, that if it does not fulfill these conditions. No, you have to write it down, the ROR definition. In case of individual, if they'll ask, you have to write it down this definition. So that's why we have to understand these conditions by both ways. Let me show you the help of the diagram. This diagram, I believe you must have gone through. So if HUF become resident, then either it would be ROR or RNOR. If Karta more than equal to 2 years resident out of 10 preceding previous year and both conditions should be fulfilled students. Okay. If Karta more than equal to 730 days in 7 preceding previous year. I believe those students who have gone through with this diagram after the class, after revising the provision, if you gone through with these provision, you would be feeling that residential status provisions are not that complicated as it would look like when we go through the normal theoretical provision. See, there is a query. So, correct, Shamli, you're absolutely right. Yes, exactly, Riddhiben. Mustafa. Mustafa, not 731 days. It should be 730 days or more because in this RONOR, we need less than 730 days. So less than 730 means 729 or less. So the opposite would be 730 days or more. Okay. Shireen, in Mitakshara school, what does a karta mean? The same. The same. We have discussed the elder co-partner would be treated as karta in HUF. Sir, for ROR, we have to satisfy both the condition enough. For the purpose of ROR, we have to satisfy both the condition. If any one condition is being satisfied, that means you are a resident and not ordinary resident. You can try it. If you satisfy one condition, that means any one of these conditions must have been fulfilled. We will see in these type of question in our illustrations. Mustafa, I'm saying about you said to reverse the condition. So reverse would be 730 or more, na, Mustafa? It's not 731. Because for resident and not ordinary resident, the condition is less than 730, not equal to, less than. So to reverse this, you have to be 730 or more. Read it carefully. Maybe you are confusing. Okay. Now I got it, sir. Very good. Japati, good morning. Any query? Vikas is asking. Basavaraju saying, good morning, sir. This is my first class in online. Good morning, Basavaraju. But if this is your first class, we are discussing the second session of this topic, chapter number 2. So you might will not be able to understand the provision correctly. So I recommend you, please go through with the first class basic concept we have started on 21st of October. That is on YouTube also. So first of all, you should watch class number 1, then second, then third, then this fourth or fifth class you have to attend. So that would not look like that you are not understanding the provision, because if you will come between the class and between the topic, that would be really difficult to understand. Okay, Mr. Vikas, I have a question. If a person income is below the threshold limit, but TDS has been deducted, will that person be considered an SSC or not? So if your income is less than that, you would not be regarded as an assessee. But you have to file your return for TDS purpose. But we cannot discuss these TDS concept right now because that will confuse the students. Gotli Anil is not 729 or more, it should be 730 or more. Okay. Yes, Kuldeep, for becoming a resident, not ordinary resident. The concept is you have to satisfy any one condition. And for the purpose of becoming a ROR, you have to satisfy both conditions. Adil Khan is saying both for HUF and only one for individual. Exactly. But both for HUF and only one for individual is having the same concept. Because for individual, we are finding out RNOR, and for HUF, we are finding ROR. So when a person become ROR, understand now, when a person become ROR, if you are even going through this definition, when a person become ROR, when he does not satisfy any of two condition of RNOR. So when it does not satisfy any of these conditions, less than 739 out of 10, that means automatically you are satisfying these two conditions, 730 days and more and 2-year resident upon 10. Automatically, if it does not satisfy any of these, you are technically satisfying both of these. In any illustration, you can check it out. Or reversal, if you does satisfy these both, that means you are not satisfying any of these conditions. So they are thus active and passive, no difference. Let me solve some question, and after that you will find it out that these conditions are very simple. It's just we are reading it from both ways, so you might be getting confused. But just stay with me, we will sort each and everything. Yes, individual and HUF is a bit tricky, but everything else is simple. Satish is asking, non-resident in 9 out of 10 preceding previous year. Can you explain this? Satish, I have already explained this in the last session. Kindly watch the last class so it would be easy for you to understand what exactly we are saying. Nagaraj, we will solve a lot of example. Today's also and in the next problem class also. So all the concept would be clear. Just understand what we have discussed this time. Okay, so moving ahead. Now we are going to understand a question, a special condition, what we left in the last provision. These are special provision. So the general rule regarding the day of arrival and departure is that the day of arrival and the day of departure technically assume as in India. We have discussed that in last class. But in case of crew member of an Indian ship, crew member of an Indian ship, technically reverse is going to be done. That means the day of departure and the day of arrival would be treated as outside India. So this is just a trick, I just explain it to you that the day of departure and arrival, in case of crew member of an Indian ship, you have to include it as staying outside India. What is the exact provision we are going to discuss? How to determine the period of stay in India for an Indian citizen being a crew member. In case of foreign bound ships where the destination of the voyage is outside India, there is uncertainty regarding the manner and the basis of determining the period of stay in India for an Indian citizen being a crew member. So generally, in normal cases, what we does, we have to find out the number of days that individual is staying in India. But in case of crew member, we have to find out how many days he was outside India. And the balance number of days we will consider as staying in India. The same thing happens, but the concept has been reversed. In case of crew member, you have to find it out in question how many days he or she was outside India. And in that case, the day of departure and arrival technically would be treated as outside India. What is exactly the provisions? To remove this uncertainty, explanation 2 to section 6.1 provides that in case of an individual being a citizen of India, a member of a crew of a foreign bound ship leaving India, the period of stay in India shall be as prescribed condition. These are the conditions. So this is the concept which is going to explain you that the day of departure and arrival should be stay as outside India. The language is different, but exactly the meaning is same. It say the period to be excluded. What I told you that in case of crew member, we have to find out how many days he is outside India. In case of normal individual, what we find out how many days stay in India. So in crew member, we find out how many days he or she was outside India. And then in total number of days in a year, we reduce this outside India days. So we will find it out in India. This is the process we have to follow. And how many days we will consider him outside India? The date entered into the continuous discharge certificate in respect of joining the ship. So technically the day he enter into the ship is in India. But the day he enter into that ship in which he is going outside India, from that day, we will assume that he is outside India. Even ship is practically in India. But the day of boarding, you can understand, the day he enters into that ship, the day of outside India start. And till what time it would remain outside India? Till that time he does not leave that ship, he will be assumed that he is outside India. The date enter into the continuous discharge certificate in respect of signing off. So these two words you should remember: joining the ship, signing of the ship. So the period of outside India would be treated till that day he's joining that ship, and till that time he's signing of that ship. So signing of it's technically departure from the ship, and the joining is technically the arrival into the ship. So both these 2 days would be assumed as outside India. Now let me tell you a very interesting thing. Maybe some of you now getting confused. What are this provision? How we will calculate this? Now see the power of illustration and example. Now we are going to solve the illustration number 1, which has been given in the study material. I have copied that over here. And now according to this provision, we solved it. And after the solution of this illustration, now you feel the provision was so easy. Let's see. The date from joining into the continuous discharge certificate till the date entered into the continuous discharge certificate of signing off. This days or this time would assume outside India. So now example. Suppose the solution process is this: you have to take the number of total days in the year. If it is a leap year, we have to take 366. The joining date till signing of time duration, you have to exclude. After that would be the days stay in India. According to these days, we have to find out the residential status. Now, this is the illustration number one. I have written this in short. Mr. A, date of joining 6 June 25 and signing off date 9 December 2025. Calculate the number of days he is in India. So because it is not a leap year, so total number of days we should take 365. Now from 6 June 25 till 9th December, we will assume him as he is outside India. That's it. Number of days 187. Remaining number of days in India is 178. And because he is a crew member who was going outside India, he does fall in condition number B, first exception. If you are a citizen of India going outside India for employment purpose or a crew member of an Indian ship, you will be treated as a resident if you are in India for 182 days or more. In this example, you can see he was in India for only 178 days. So he would be regarded as a non-resident. Now tell me, how much that signing of provision, what we have discussed with the theoretical concept, now you are feeling is difficult. Now you are feeling that it is difficult to understand that concept. Now, if you again read these provision, you will understand these provision in a go. You will say, okay, this is so simple. What do I need to do? Nothing. From joining date till signing off, I have to remove this time period out of my number of days in a year. Remaining number of days, he is in India. Accordingly, we can find out his residential status. In the last session also, I have told you, whenever there is a question of residential status, first of all, you have to check whether that is related to special condition case or normal condition case. This should be the starting of your question. So now let me see how many are feeling that that voyage provision is difficult. Mustafa is saying, now understand we have to exclude both days. Exactly. Sir, in exam, how we will describe it the way you have described it, you can refer to the study material illustration solution. Accordingly, you can describe it. Sir, can we solve the illustration one in short like you describe, or we have to follow the study material format? You have to follow the study material format that we will discuss how to present the question also in some class. First of all, you have to study material explain you everything in detail because students should know from where that provision has been applicable, etc. So that is in more detailed solution in every question to make you understand. Like in the basic concept, there is marginal relief concept. You can see the illustration has explained you in two methods, alternative method and normal also. But you have to choose anyone. So you do not need to explain it that much as explained in illustration, but you have to write down the provision and then you can solve that question accordingly. Only for applicable for crew members of ship, not the crew members of aeroplane. They will fall in normal category. It is easy. I told you, just stay with me. I will make everything easy. And whatever your confusion in basic concept chapter 1 or chapter 2 of residential, when we will complete our class on 1st of November, these two chapters would be, you feel, easiest topic till now. And you would be able to solve any examination type question from chapter 1 and chapter 2 after the 1st November session. I promise. Okay. So those were the two provision. One was regarding the HUF, etc. So now tell me, is there any problem in illustration one we have discussed right now? Now tell me illustration number 2. Anybody has any problem in illustration number 2, then we can solve it. Satish is saying no. Mustafa, is any formal way for any subject to answer for theory question. That will board of study will clarify you how to answer. There would be classes before your examination. They will explain you how to attend the paper, etc. Maybe I'll also going to explain you later. Abhi, do not think about the examination. Abhi, just think about to understand the provision, to solve the question, etc. How to present the question, what are the requirement of question, that would be discussed later. Hina wants to know illustration number 2. Okay, so let's move on to illustration number 2 right away. Illustration number 2, that would be on page number 2.9. So illustration number 2 in front of us to understand. It says Bratley, an Australian cricketer, player visit India for 100 days in every financial year. This has been for his practice for last 10 financial year. So this kind of question we have discussed in the last session because he an Australian cricketer, that means not citizen of India. If he is not citizen of India, that means both condition is applicable upon him. So accordingly, he would satisfy the second condition. He would become the resident in India. Clear? And after becoming resident, either he needs to fulfill less than 730 days condition in 7 PPY. And he will fulfill it because he would be in India for 700 days. So in first case, he would be a resident and not ordinary resident. But he now wants to know part B. What your answer change if the above fact relates to Srinath, an Indian citizen who reside in Australia and represent the Australian cricketer team? Now, if he visit India for 100 days every year, so what will happen? Because he's a citizen of India, so he do fall. Okay. Now tell me in which case he will fall. Getting special condition B1, B2 or B3. B1 is not applicable. He could fall under B2 or B3. If he does not having income more than 15 lakh rupees, then he will fall in category 2. And if he does have income exceeding 15 lakh rupees, then he will fall in point number 3 of that category. Clear? So suppose he does not have income exceeding 15 lakh. Suppose he does not have income exceeding 15 lakh. Now we will solve it. Then because he is an Indian citizen, only first condition would be applicable. That would be more than equal to 182 days in India. And he is in India for only 100 days. So technically, he would not fulfill this condition. He would become non-resident. Clear enough? If suppose he is having income more than 15 lakh from Indian resources, then two condition more than 182 days would apply, or second is more than equal to 120 days plus more than equal to 365 days apply. He is not fulfilling this. He is not even fulfilling this because he is in India for 100 days. So whether he is having income more than 15 lakh, not having more than 15 lakh, the answer would remain same. B point, he would be regarded as non-resident. Clear? Is the solution. Up in examination, you do not need to write it down like this. These are steady illustration, which they just want to make you understand things in detail. That if any student have any confusion, so they write it down as per the provision was this, these are the condition, number of days calculation. They explain you each and everything in detail. So here is your answer, Hina. I hope it's clear now. Any other problem, students, in illustration number 1, 2, and 3 and 4? Correct. Because in this question, study material has explained you in detail that suppose he does not having income more than 15 lakh, suppose he's having income less than 15 lakh, but in general, if this kind of question has been asked in examination and income has not been given, then we can consider it as point number B, second case, that income does not exceeding 15 lakh rupees. Shireen is saying, explain the part 3 also, as there is no income is mentioned. So institute is just trying to explain you extra provision. that suppose he is not less than he is having income more than 15 lakh, then what would happen? And suppose income does not exceeding 15 lakh, then what would happen? But in examination, if income information not given, then you can directly solve assuming that he does not having income from Indian resources. Now you can see in case number C, the question has changed. The question was saying, suppose in Srinath is visiting for 120 days instead of 100 days in every previous year. Now what will happen? The provision says, if his total income excluding income from foreign resources exceeding 15 lakh, he would be treated as resident because he will fall in category B. Third case, more than 182 condition does not satisfy, but more than or equal to 120 days condition plus more than equal to 365 days condition has been fulfilled. So he would become the resident. Now, after becoming resident, now we have to see whether he will fulfill less than 730 condition. Second was 9-year non-resident out of 10 year. He is in India more than 730 days. So that would not be fulfilled. 120 days into 7 years, 840 days. He would be a resident for year 24, 25, 23, 24. So this condition also does not fulfill. But for B, third category, there is one condition. More than equal to 120 days and less than 182 days. He does fulfill it. So technically, he would be a resident and not ordinary resident in this case. Okay. Indian sources information not given. So they are just explaining you in detail. Illustration 2 part B has been discussed. B2 we have discussed. Okay. So I believe you must have tried the illustration. You must have gone through with the chart provision also. Aishwarya is asking, sir, in case of Virat Kohli, we should consider as a non-resident as per basic condition of individual. Aishwarya, do you know or do I know that how many days Virat Kohli is in India or not? So how can you ask these kind of conditions? So I don't know. I can't answer any question until I have the information. How you want me to solve? You are asking like regarding a patient. If he asks that doctor, there is someone who is not well. What is the treatment? So doctor needs to know what is the issue. What are the reports says? What issue is suffering? He is not well, and tell me the solution. Tell me the treatment. How it's possible? Please do not ask these kind of questions. Okay, very good. Well done, Hina. If everything has been clear, that's really good to see. Notly correct. Done. So we have completed this provision. Now moving on to rest of the provision. So we have seen that how to find out the residential status of an individual, etc., etc. Fine. HUF, individual, company, partnership firm. But now it's the time to understand the impact of it. In the starting of the class, I have told you that this is very, very important to find out the residential status of a person because it impacts the taxability of the income. So how it impact the taxability? If you become a resident and ordinary resident, or you become a resident and not ordinary resident, or so on. So how it impacts your taxability, that is going to be discussed in this topic of this chapter, that is incidence of tax. Incidence, you can say burden of tax. So now you will understand, okay, this is the reason why do we need to find out who is ROR, who is RNOR, who is NR. So scope of total income. There are actually 4 categories of income. There are 4 categories of income. And that is the treatment. Some incomes are taxable for resident, ordinary resident. Some incomes are taxable for resident, not ordinary resident. And some incomes are taxable for non-resident. What are these income? Whatever income you earn, either they will fall in category 1, 2, 3, 4. We are not discussing about the heads of income. No, it is before that. Before, heads are just the classification of income under various heads. But these are the arisability of income. How you earn that income, how you receive that income. You will get to know when we will discuss these provisions. Okay. Section 5 provides a scope of total income in terms of residential status of the assessee, because the incidence of tax, the burden of tax on any person depends upon his residential status. The scope of total income of an assessee depends upon the following three important considerations: the status of the assessee, the place of accrual or receipt of income, the point of time at which the income had accrued to or was received by assessee. What they just trying to explain, let me explain you with the help of a diagram. So that will make things really easy for all of you. Now, what is this section 5 says? What is this incidence of tax? So there are some categories of income. Particulars. If you are a resident and ordinary resident, if you are a resident, not ordinary resident, and if you are a non-resident. Why I am making this format? I have already inserted this format in the notes. Okay. So let me show you. This is the format I was trying to prepare. So this is incidence of tax. Particulars, that means you can say types of incomes. So whatever income you see, these incomes are going to fall in types of income 1, 2, 3, and 4. And we have to see what kind of income is taxable in which category of person had. First of all, first income is income arise or earn or deemed to arise or earn in India while received anywhere. What is the meaning of income arise or deemed to arise? So arise means directly earn from India, and deemed to arise means indirectly earned from India. What is the exact meaning of deemed to arise or indirect? That we will discuss in this chapter. But the treatment of whether you arise income directly from India or indirectly, the treatment under income tax is same. For the purpose of income tax, arise and deemed to arise is same concept. So where income arise or earn, or where income deemed to arise or earn. So the concept says if income has arise or deemed to arise in India, but received anywhere. So if any income fall in this category, that any income, suppose I have received 10 lakh rupees. So I have to find out first whether these 10 lakh has been arise in India, and if it is arise in India, where it has been received, whether received in India or outside India. Accordingly, we have to tax that income. So the first point says if income has arise in India, if this condition has been fulfilled, whether received in India or anywhere does not matter. Technically, received does not matter. If arise in India, then that kind of income is taxable for all, whether you are a resident, ordinary resident, resident, not ordinary resident, or a non-resident. Does not matter. Everyone needs to pay tax on those income, those has arise or deemed to arise in India. Received in India, not received in India, received outside India, does not matter. You have to pay tax on that income. Let me give you an example, very simple. Suppose a foreign doctor comes to India for operation of any patient in India. He does the operation in India and his fees is 50 lakh rupees for that specific operation. But what he said, I will not receive this fees in India. I have done the operation in India. I want this my fees in my USA bank account. Deposit my fees in my USA bank account. Now you can see in this case, where has the operation has been done? The operation has been done in India. So where the services has been rendered? Where? In India. So the services has been rendered in India. That means income arise in India, income due in India, income earned in India. So you technically, where from you earn that income, where you provide your services, where you sell your goods, etc., that place is treated as arise. So because he conduct the operation in India, but received the amount outside India. But the main issue is if the income has been arise in India, then you have to pay tax in India, whether received anywhere. So because he's a foreigner, so technically he must be a non-resident. Just come for visit in India for operation purpose. Done operation, went outside India, received income outside India, but this kind of income will fall in first category of income. That means arise in India. And on this kind of income, you need to pay tax in India, whether you are a ROR, a RNOR, or a NR. Does not matter. So the main key concept is where income arise. So if income arise in India, you have to pay tax in India. Understood? The second is the reverse case. Income if received or deemed to received in India, while arise or earn anywhere. The exact reverse case. The first point was saying if you earn income in India and received anywhere, you have to pay tax anyway. Now the reverse case, if you received income in India, earn anywhere, you have to pay tax. Now reverse the example. Suppose a doctor from India, an Indian doctor, went to USA for an operation. He conducted the operation there, came back to India, and received the fees in Indian bank account. The reverse case happened. In this case, the service has been provided outside India. That means income arise, earn, accrue, etc. outside India, but you received in India. So if you received in India, again, that kind of income is taxable, whether you are a resident, non-resident, whatever is the status, does not make a difference. So if we discuss these two cases together, it says arise or receive. If any one of these condition has been fulfilled, any of one these condition, if both fulfilled, again taxable India. If any of these two condition has been fulfilled in India, you have to pay tax. Like I am in India, I am providing services to my clients and they are paying me the fees in India. So now in this case, arise, received, both in India. Tax need to be paid, whether I am an ordinary resident, not ordinary, or non-resident. Understood? Suppose I am in India, I went outside India for providing services outside India and received the income in India. So even arise outside India, but because received, need to pay tax. And again, vice versa. So first and second point is having single key factor. First is arise in India, taxed. Everything else is irrelevant. Second is received in India, taxed. Everything else is irrelevant. So you would see there is no benefit of becoming a non-resident or not ordinary resident yet. Because if arise or receive, you have to pay tax in India. But the benefit will start from point number 3. In point 1 or 2, one activity, whether arise or receive, any one activity was taking place in India. Then it's going to be tax for every person. But now both activities are going to be held outside India. Now the third case is saying arise and received, both outside India. This is a different kind of classification now because it does not fall in case number 1 and 2. But if the business controlled from India, if that business, the income you are earning, if that is controlled from India, then for resident and ordinary resident, it's taxed. For resident, not ordinary resident, it's taxed. But for non-resident now, there's an advantage. This is not going to be taxable. Now, let me tell you an example. Suppose Mr. A went outside India and he's running a business there. Suppose in UK. He's doing a business there. But the head office that business, the controlling, the setup of that business, this business setup, holding company, head office, etc. in India. So in this situation, this income has been arised in UK, outside India. All the payment has been received also outside India. But the provision says the head office and the holding structure and the setup and the control is from India. So this income is going to be taxed for this category of person, this category of person. But if you are a non-resident, if Mr. A is a non-resident in this situation, then he needs not to pay any tax in India. But if he's a ROR, he needs to pay tax in India. If he's a RNOR, he needs to pay tax in India. So now you understand the benefit will start from third category of person, whether arise and received outside India. But if that business has been controlled from India, in that situation, the ROR and RNOR needs to pay tax in India, but non-resident does not needs to pay tax in India. That was the third category. The last category of income. Now what will happen? Arise, received, and even control. Everything is outside India. Nothing controlled from India. Even in that kind of income, if you are a resident and ordinary resident, you have to pay tax in India. This is non-taxable for these two categories of person. So now suppose Mr. A went outside India, start a business, he reside there, he receive income in there, business control from there only, no control from India, no holding in India. In that situation, even on that income, you have to pay tax in India if you are a resident and ordinary resident. Have you remember I have told you in this chapter, if you become a non-resident, that would be good from the point of view of taxation. And if you are a resident and ordinary resident, technically you understand what happens. For resident and ordinary resident, any kind of income that is going to be taxed in India. Like I am a resident and ordinary resident. Even if I went outside India, arise there, received there, taxed. Arise here, received there, tax. Arise, receive, control from here, taxed. Arise, receive, control from there, tax. So, yeah, for a resident and ordinary resident, there is a universal rule. All income of this previous year is going to be taxed, whether received in India, arise in India, not received in India, not arise in India, control from India, not control. Universal provision, all kinds of income going to be taxed for a resident and ordinary resident. For a non-resident, only two incomes are taxable. If arise in India, then taxable. If received in India, then taxable. That's it. No other income is going to be taxed for a non-resident. So for an ordinary, all taxed. For a non-resident, only two income needs to be taxed. For RNOR, there are three taxability. Arise tax, receive tax, and business control from India tax. only one income is not taxed when there is no connection with India, not arise, not receive, not control. Then that is non-taxable for resident and not ordinary resident as well. I hope till now this is clear. Now the fifth point also here. And let me tell you, it is not regarding the income. These kind of point would be given in the question to just make you confuse. Point number 5 does not consider any kind of income. But if that kind of point has been given in the question, so you might get confused. So just to protect you, I have just explained this point number 5. This is not in the study material. I just added it into this format. So your confusion will be clear that in examination, you would not do any mistake. Let me show you what exactly point number 5 and 6 says. Suppose in question, there is a point. A point came and it says, Mr. A earned 10 lakh rupees in India on arise accrue same meaning in India in previous year 23-24, but no tax paid on it. Second point, untaxed preceding year incomes 20 lakhs received in India. So now you need to tell in which person this needs to be taxed. So when we understand the incidence of tax concept, there is a provision which is actually stuck in our mind that for all kind of income, the taxability need to be done in the hands of ROR. So you might need to going to tax. Okay, that was untaxed. Let me tax it. Now I am the superhero. I will tax it. No, do not try to this it. That would make your solution wrong. Understood? Any confusion? Okay. So you can read this point from over here. Read it point number 1. Till now it's clear? Okay. Now point number 1 was to just make that clarification. Income of earlier years or preceding year. We just need to ignore it completely. Understood? Ignore it completely. You don't need to do any treatment of it. Just ignore it. Next point number B is also there that could confuse you in examination. So the basic taxability upon where income has arise, earn, received. We have to check these points. Arise in India, earn in India is same thing, of course. So arise or receive are two main ingredient to find out the taxability. So if income is arise in India or received in India, we are going to tax it. But there could be a case to make you confuse like this. Suppose questions say Mr. A earned 10 lakh rupees in USA and out of 10 lakh rupees, he remitted, and a word is brought. or there could be a word send. Out of it, I send 6 lakh rupees to India. Now you might feel that if you are a resident and ordinary resident, and a resident and not ordinary resident, or a non-resident, the taxability will depend upon arise, received, and one more important concept from where it controls. These 3 points decide the taxability only, nothing else. In this example, if you will see, earned 10 lakh rupees in USA, and out of this 10 lakh he remitted. Whether remitted fall under arise, received, or control? No. So that information is not relevant. Brought, not relevant. Send, not relevant. So this line, that how much he remitted, are irrelevant for the purpose of solution. It is not as irrelevant as earlier year. We are not saying do not do any treatment of this. No. Just ignore those income. Those have been either remitted into India, has been given in question, brought into India, or sent into India. The income which would have been remitted, brought, or sent into India would not have any effect on our solution. So now, accordingly, only on the basis of this information that he has earned 10 lakh rupees in USA, now you have to solve this point. If the question is silent about where it has been received or controlled, then we will assume where it has been earned, it has been received over there, and of course, control from also. So in that situation, this only 10 lakh is going to be taxed in the hands of resident and ordinary resident. In two cases, non-taxable. Why 10 lakh is taxed in resident? Because any income of current year always going to be taxed in case of RO. Out of this 10 lakh, how much has been remitted into India? That cannot be taxed because suppose I have earned 50 lakh rupees in previous year in India. Out of that 50 lakh rupees, I have taken 5 lakh rupees with myself. I am going to travel Dubai. So I have taken this 5 lakh with myself to Dubai. So that country is not going to tax it because it is called remittance or brought. The taxability will depends upon arise, receive, and control of income. In the same way, someone from USA have earned some income in USA and comes to visit India, and he is bringing 10 lakh rupees with himself. So we cannot tax it because that is not received in India. That is not arise. That is not control. That is remitted into India. So remittance, brought, and send will not affect the taxability. That information is irrelevant for us. Balance need to be taxed on the basis of the information given. I hope it's clear now. Okay, so let me take the queries if there is any. Mr. Gottlieb Anil again asking the reason. That reason I cannot explain. So what's the main reason for applying reverse condition for HUF? Because I have explained earlier also, Mr. Anil, why it has been like this. Now, this is very difficult to make you understand because there's a reason behind it, of course, in every provision, but it will consume a lot of time. So we should not go into that way. But so let me tell you, earlier, like 10 years or I guess 10 or 20 years before, the conditions were exactly the same in both cases. But then amendment came, and according to the amendment, they have inserted a definition of R and OR. Earlier, the condition was exactly the same. HUF were the condition. For individual also, there was condition of like HUF. You have 730 or more or 2 year or more. But then amendment came that we will explain RNOR, not ROR. So they have amended the individual provision, but they forgot that we should take the amendment also to the HUF category. So in the Act, HUF remain like that and individually has been changed. So that happens. Otherwise, the provisions are exactly same. Nagaraj is saying that means global income taxable of ordinary resident. Exactly. You are an ordinary, so you have to pay tax in India wherever you are. It does not matter. चलो एवरीथिंग हैज बीन रेमिटेड मींस लेकर आना ऐश्वर्या रेमिट का मतलब होता है पैसे को यहां से वहां भेजना या लेकर आना टू ब्रॉट or to remit, to send the money, technically we can say, or to bring that amount. So in case of incidence of tax, bringing, remittance, sending does not have any effect. It is arise, received, and control. According to that, we have to find it out whether it's going to be taxed or not. Hina is saying, what if business is controlled outside India but income received in India? Yes, it's going to be taxed for everyone. The point number 2 says, arise outside India, but if received in India, income received in India, arise anywhere, does not affect. You have to pay tax whether you are ordinary, not ordinary, etc. Okay, Mustafa is saying clear. Okay, Pranav is saying, sir, if ROR, RNOR, earn income and received outside India with control from India, if they remit amount of 20 lakh, look, remittance does not have any fact. If there is any income which has been comes with remit it that much amount, I will ignore it. So in your example, if RNOR earn income and received it outside India, then it is tax for ROR because whether received, whether earned does not matter. You have to pay tax. And because business is controlled from India, then our NOR needs to pay tax. But if in a case of NR, in that situation, they need not to pay tax in your example. Ashlisha is saying R and O are taxable in all cases. Exactly. Except that earlier year or preceding year income case. Meenu Kumari is saying black money ignore it means remitted is ignored. 10 lakh arise taxable. Exactly. Remitted and already arise income outside India may be taxed foreign. So if they brought into India, so it is black money. No, it is not black money. You have paid, if you did not arise income in India, not received in India, not controlled in India, then that income, the government say we don't need that income. We will not charge tax on that income. If you are not a ordinary resident. If you're an ordinary resident, you have to pay tax in India. So remittance is not in our purview for taxability. Sir, in last example, you taught Mr. A, USA, you assume as business is not controlled in India, right? Yes, of course. If the question is silent and only information has been given for income earned in USA, then you have to assume that control from USA and of course received also in USA. Okay. So with the help of this diagram, what will happen? A lot of provision will automatically clear without even reading it. So now you will see as separate point are going to make you understand what kind of income is going to be taxed for ROR. Now we already know it. Whether received in India, whether arise in India, whether received outside India, all incomes are taxable. For RNOR, received arise in control taxable. For NR, only two incomes are taxable. So these points we have already understood with the help of this format. Now in this format, in the first point, I was saying there was income arise or deemed to arise. The deemed to arise means indirectly. So what is exactly the meaning of deemed to arise? That what is left in this chapter to discuss. In the remaining provisions of this chapter, we will discuss only 2 points. What is the meaning of deemed to arise? And what is the meaning of deemed to received? That's it. Everything else has been completed. And let me tell you, this deemed to arise and deemed to receive concept is pure theoretically. Little provisions are there that is going to be explained. But accordingly now, you can see the chapter 2 is technically 90% has been completed. Technical part of it. Now theoretical and just basic information needs to understand. The categories of income which are deemed to accrue or arise in India are. So I've told you we need to understand only two topics now, deemed to arise and deemed to receive. And that deemed to received is just 3 or 4 minute concept. So technically whatever is left is just to understand what is deemed to accrue or arise. Deemed to received is for 3 or 4 minutes concept. Now in a broader way, if I need to make you understand what is deemed to arise. So deemed means assume. It is indirect connection for any income from India. And in different ways, it has been explained it to us. One by one, we will see when we will assume that connection is indirect. So any income arising, accruing to an assessee in any place outside India. So if you income arise outside India, but we will assume it. No, no, no. It is deemed to arise from India. So practically, actually, you are earning income from outside India. But we will assume in following cases, even practically it has been earned outside India, but we will assume it as technically arise from India. Directly, indirectly. Any business connection. So we have to understand the meaning of business connection. Any property in India, any asset you have transferred, the capital asset, any other source of income that would be regarded as deemed to accrue or arise in India. So in the remaining time, we will going to understand only these points in detail one by one. And that deemed to arise concept, you can see, this is the diagram, beautifully drafted in your study material. I have just copied it from there. And they've explained every case. What are the meaning of business connection, when salary could be deemed to arise, when income from other source could be deemed to arise, when house property income could be deemed to arise, etc. So starting from these points, there is some queries. Let me see. Nagaraj is saying Indian Embassy in Australia. There is separate provision for section 1017 is there for that. Do not worry. Mr. Aditya is saying, sir, if I start a business in outside India, where should I pay tax? First of all, you have to tell me whether you are a resident and ordinary resident, whether you are a non-resident, whether you are a resident and not ordinary resident, and then you need to tell me whether all income arise outside India, whether all income received outside India, and from where business is controlled. When you will give me this question, then I can answer. So to answer any question, there must be question completion also. So your question is very incomplete, Aditya. So when you will give me these condition, I would be able to answer it. Harsha is saying, sir, on 1st November, you will take extra question of chapter 1, 2 because all illustration are completed by us. On 1st of November, we will discuss all test your knowledge question of chapter 1 and 2. And there are 4 MCQ sheets question I have prepared that we will also discuss on 1st November. Illustration, of course, you would be able to complete automatically. If there is any query in illustration also, chapter 1 and 2, again, we can consider it. If there is any problem in any provision, you can also ask it. So it would be on 1st of November. Aditya is saying resident in India. Aditya ji, resident is having two. Please tell me, ordinary resident or not ordinary resident? If ordinary, income is taxed in India. If not ordinary, then you have to tell me, or either you have to understand that if arise in USA, non-taxable. Received in USA, non-taxable. But if it's controlled from India, then again that income is going to be taxed. Rental income earned from property outside India. If it has been received in India, then taxable. But if income is properties outside, if received outside India, then it would not be taxable. But it would be taxable if you are a resident and ordinary resident. But if rental income is outside India, properties outside India, received outside India, then it would not be treated as deemed to arise in India. We have that provision in this concept. Just wait. Saipa is asking, for ordinary resident, if income is arised outside India and received outside India, we need to pay tax in India. So do we also need to pay tax outside India in the country which income is arised or received? Now, this is a good question. Okay, listen, everyone, listen please carefully. Saipa has asked that suppose if an ordinary resident like me and you, we all are ordinary resident. Okay. And if I have earned some income outside India, so I have to pay tax in India. And suppose if I do need to pay tax outside India also, suppose I went outside India for some lectures and I have received some income. And because I have earned income from that country, so that country say you have to pay income tax in our country because you have received income there. And India says you are an ordinary resident, you have to pay tax on this in India also. So there could be situation when there would be tax in both countries on the same income. There could be possibility. Of course, that is called double taxation. But in that kind of situation, our government has made a chapter, I guess section 90 and 91 is there. There's a concept which says double taxation relief, and for which we have some agreement with other countries, double taxation avoidance agreement. But that concept says in this situation, you have to pay tax in one country, either in our country or in the that country. Our government will give you discount of tax relief. What is that relief at would deem to accrue arise? These are the business cases in which income is going to be treated as deemed to arise from India. In the case of a non-resident, if you are a non-resident, look, if you are a resident and ordinary resident, then it does not matter that income is arise or deemed to arise from India or outside. In any way, that is going to be taxed. For the purpose of a non-resident, these provisions are very important because for non-resident, there's only two income tax in India, arise and receive. So we have to include certain income in the definition of deemed to arise because we have to tax that income in the hands of non-resident. The following shall not, however, be treated as business connection in India. So deemed to arise says if you have business connection in India, we will assume it deemed to arise. But this case would not be treated as business connection. That means this case would not be treated as deemed to arise. In case of business in respect of which all the operations are not carried out in India. Suppose you run a business of which all the operations are not carried out in India, the income of the business deemed to accrue or rise in India shall be only such part of income as is reasonably attributable to the operations carried out in India. So suppose there is a company in USA who manufactures car in USA only. Like suppose Tesla. Tesla is manufacturing car only in USA. No operation has been conducted in India. So all the parts, assembling, manufacturing has been done in USA. But they open a unit in India for manufacturing of tires. Only tires are manufacturing in India. All other operations of that car, manufacturing, assembling, etc. has been done outside India. And suppose there is no sale of car in India. All the cars has been manufactured in USA yet and they are sold outside India only. They are not selling those car in India. But manufacturing of tires has been done over here. Suppose due to that activity, Tesla earned 1000 crore rupees profit in the previous year. So Tesla is a non-resident company for us. They earn 1000 crore profit. Now the deemed to arise definition says if you have a business connection in India, we will assume that India is deemed to arise. Suppose income tax says that you have to pay tax on this 1000 crore income in India. Why? Because you have business connection in India. You are manufacturing tires. Manufacture the car. But if you don't manufacture the tire, how can you run that car? So we have business connection. You have to pay tax on this 1000 crore rupees in India because we will assume it as deemed to arise. And if it is a deemed to arise, you have to pay tax. So income tax made a clarification. No. If all the business operation has not been carried out, that means if some part of business operation has been carried out in India, then we cannot tax the whole income as income deemed to rise in India. A proportionate part of this profit could be treated as deemed to arise. We can find out the cost of those tire proportionate to the value of the car, and suppose it's like 2%. Then out of this 1000 crore, we can assume 2% is deemed to arise in India. That will depend upon case to case basis. But the concept is if all the business operations are not carried out in India, then only that part of income could be treated as deemed to arise, which is attributable, not the full profit. Understood? Simple. Purchase of goods from India would not be deemed to arise. Suppose a non-resident purchase goods from India. Purchase. So he is technically not taking income from India. If he purchasing, he is technically pays to Indian businessmen. So he's not earning income. He's just doing expenditure. If you sell something in India, if you earn income from India, that could be treated as deemed to arise in India. But if in case of trading, look, if you manufacture any part, that part income could be taxed in India as per this concept. But if you're not manufacturing, you are just purchasing goods from India and selling it outside India. In that case, the profit you earn from sale of those goods would not be taxed as arise in India. Because that person who is purchasing from India, he's not taking income out of India. He's technically paying to the businessmen of India. So they will pay tax. That non-resident would not pay any tax from that profit he accrue or profit he earned out of that purchase. Suppose non-resident purchase 100 crore shoes from India and sold these shoes for 190 crore outside India in other country. So the profit he arise on this difference would not be deemed to arise in India. No part of profit could be treated as deemed to arise because he technically pays 100 crore rupees to Indian business. So those businessmen will pay tax on their income. In this case, purchasing of goods case, there would not be any deemed to arise. Understood? Simple case. If you are only collecting news from India and transmitting out of India, you are not releasing those news in India. In that case, again, there would not be any deemed to arise of income case. If you are shooting in India, any movie, documentary, etc., and releasing that documentary outside India and earning income from outside India, again, that is not going to be taxed in India. The income you earn via releasing those documentary and movies outside India, you do not need to pay any tax in India, provided these conditions are fulfilled. The non-resident who is the owner of that movie or documentary should not be a citizen of India if he's an individual. So we're talking about the producer. If that producer is a partnership firm, then all of the partner of that firm, not citizen of India and non-resident of India. If they are resident of India, any one of them, or citizen, you may need to pay tax on that income which you have earned by releasing that movie or documentary outside India. If that producer company is a company, then no shareholder should be a resident of India or not a citizen of India. If any shareholder become citizen or resident of India, the company may needs to pay a certain amount of tax on the income that earn from release of that country outside India. Okay. So there are general provisions. You have to go through it. Even in these provisions, if there would be any problem, we will solve it on 1st of November. After the break, we will continue some special points in this category and we will solve some illustration also to make you understand the concept of incidence of tax in a better way. Let me see if there is any query. Previous year questions, no, we will not going to show previous year question. That would be the part of the revision class. That would be taken, I guess, near your examination. Aishwarya, sir, the Apple company started manufacturing a smartphone, then it considered as deemed to arise in India. If they are manufacturing completely over here, that it could be. But like whatever news you listen, that is not the whole reality. What operations they are carrying out in India, what are the terms and conditions? Maybe government has given them the income tax exemption because they will provide the employment, etc. So we do not know exactly. You cannot ask a general question about any big incident. So when we are not aware of the terms and condition, the structure, the activities, we cannot answer it completely. Chandana is saying royalty payable by government is taxable or not. That point is going to be covered today's class after the break. But yes, royalty paid by government to any non-resident outside India would be regarded as a deemed to arise income in the hands of that non-resident. That point is going to be discussed in detail. Mustafa is saying, but if director, writer, actors will be in India, yes, the status of director, writer, etc., does not affect the taxability. The status of producer, the owner of that movie, that should be non-resident in India and non-citizen. That is the requirement of the provision, I guess. So, time for a short break. So, listener G, can we go for a short break? Welcome everyone. So we were discussing the provision regarding the incidence of tax, and after that we have discussed the provisions of income deemed to arise in India. And that business connection concept we were discussing. Let me see if there is any query. Uh, Dia Jen wants to know any of them partners or shareholder is a resident, then whole income of company or firm taxable as resident or only part of the partner of the shareholder. No, no, no. If the partner or shareholder becomes the resident or citizen, then proportionate income which they arise due to shooting of that movie in India. Suppose there was a 10-day shooting in India for that movie or documentary, and the movie length was 2 hours, etc. So a proportionate amount government will decide, and it is not from firm, it is not from partner. Whatever amount of income that is going to be arise out of the release of that movie outside India, a proportionate part from that income is going to be taxed. And there's no specific rule about it. That is depending upon the fact of the cases. The concept you have to learn is this: that if any shareholder or partner or individual himself is being a resident in India or citizen, then a certain part of that income which has been arise due to release of that income outside India could be taxable. How it's going to be taxed, what is the amount, etc. That would be depend upon the fact of the cases. These are specific cases. We do not have any general rule. Mustafa is saying movie or documentary is separate from individual taxability. Movie is an operation which only after producer taxability. Exactly. The producer needs to pay tax or that company or firm needs to pay tax. Chandana is saying, can you say again about the transmission section 9.1? You can scroll back the video and you can see that from there. Shireen is saying, does the residential status of an individual affect the citizenship of the individual in any way? No. Vice versa is possible, Shireen. Because if you are a citizen of India, then you have some special category cases. Case number B, special condition could be applicable. So that could slightly affect your status, but vice versa is not possible. Whatever your question is, that is not possible. Shalini is saying if non-resident receive foreign allowances, then it will be taxable or not. That is going to be discussed in salary deemed to arises cases. It will depend upon what is the status, what kind of allowances receiving from Indian government, foreign government, etc. So moving to those provisions again. Point number 5, you need to go, you need to read yourself. This is your homework. General points there. Income from property. We are talking about building. Asset or source of income in India. Any income which arises from any property, movable, immovable, tangible, intangible, would be deemed to accrue or arise in India. Even if those properties in India, then wherever you receive the income from those property, that will going to be treated as deemed to accrue or arise in India. For example, higher charges or rent paid outside India for the use of machinery or buildings situated in India. Deposit with an Indian company for which interest is received outside India, etc. Income through transfer of a capital asset. So if you transfer any capital asset which is situated in India, like any land, building, etc., and whether income received outside India or wherever, that income would be treated as deemed to arise from India because asset was in India. Okay, go through with these provision also. Income from salaried earned in India. So income which falls under the head salaries is deemed to accrue or arise in India if it isn't earned in India. Salary payable for services rendered in India would be treated as earned in India. Further, any income under the head salary is payable for the rest period or leave period. For example, suppose you are working in India and for 1 month you are on leave. You went outside India, but for leave period also your employer paid you salary. So even you are not in India at that time, you are outside India, and even you are not working. and you received that salary outside India, still, because the source of income is from that Indian organization in which you used to work, that would be treated as deemed to arise in India. So technically, we can say any leave period salary, whether received in India or outside India, that would also be treated as arise in India. Leave period which is preceded and succeeded by the services rendered in India and form part of your service contract of employment shall be regarded as income earned in India. Income from salary payable by government for services rendered outside India. So it says, suppose Mr. A is a government employee, plus he's a citizen of India. He's working outside India on behalf of government, like in any embassy. Suppose he work outside India in embassy of Russia. So technically, he's working country is Russia. So he provides services outside India because he's appointed outside India. Suppose government paid him salary in Russia. So he received also income outside India. So he's working outside India. He is receiving income outside India and his status would be non-resident because he's continuously residing in Russia on behalf of government working. So technically, if you'll say, being a non-resident, only two incomes are taxable. If arise in India, if received in India. In this specific example, the income is arise outside India because you are providing service in Russia on behalf of Indian government and even you are receiving salary outside India. But because the payment has been done by government of India, so the special provision has been made that if you are a government employee, citizen of India, then even if you are a non-resident, even if you are providing service outside, provide received income outside India, this would be treated as deemed to arise in India. But in case of salaried, we generally receive three component. You will see these component in detail under salary chapter. Basic salary, one component is allowances, and one is perquisites. Do not ask me what is allowances and perquisite. That we will discuss in salary chapter. So technically, when we say somebody is receiving salary, so salary does not means only salary. Salary is the component of these three things. Why we are discussing three components over here? Because there is a special exemption in this case. If you are a government employee, citizen of India, outside India, and receiving salary outside India, that salary would be regarded as deemed to arise. And even you are a non-resident, it's going to be taxed. But out of this, in special this case, government exempted all the allowances and perquisite you received outside India. So this total income would be considered as deemed to arise in India. This is deemed to arise in India. But tax only need to be paid on basic salary because all the allowances and perquisite, even if they are deemed to arise in India, government has exempted it under section 10(7). So, however, allowance and perquisite paid allowed outside India by the government to an Indian citizen for service rendered outside India is exempted by virtue of section 10(7). So, technically, only one thing is taxable, and that is called basic salary. All allowances and perquisite need to be exempted. That's an important exemption. And this exemption is applicable irrespective of the regime, whether you are under default tax regime or whether you are under optional tax regime, this exemption can be availed. Dividend or interest. Dividend paid by an Indian company outside India would be treated as deemed to arise. Suppose a non-resident who lives outside India purchase Indian company shares. So he is receiving dividend, or maybe he purchased debentures of an Indian company. So on which he is receiving interest. So any interest or dividend received by a non-resident outside India on any securities that will always be treated as deemed to rise in India. And that is going to be taxed for that non-resident. Understood? Now, point number 5 is for interest on loan. 6 is for royalty. And 7 is for fees. There are 3 points. I am going to discuss all these 3 points in a simple chart. Very easy to understand. Before that, let me see if there's any query relevant for our topic. Foreign ambassador renders services in India. So that case, there would be exemptions. Technically, we do not charge tax on foreign ambassadors in India because they pay tax to their government. And the same vice versa, the foreign government generally don't charge tax on our ambassador. Those are appointed outside India. This concept has I have been given to the student in basic concept chapter number 1 for reading. I believe Mr. Nagra, you did not go through with those provision yet. So kindly go through with that. Or I guess this provision is going to be discussed, I guess, in salary chapter. But in that case, there is mutual exemption by both the countries to each other ambassador. They need not to pay any tax to in the country in which they are providing service. They will pay to those country on behalf of which they are doing services. Okay, Meenu Kumari understood. Harivansh is when an individual gets salary from outside India is lives in India. So again, Harivansh, I need to know what is the status of that individual. Resident, ordinary, not ordinary. Where salary is received. In India, if it is received, taxable. If control from India, again that taxable. So I need the detailed information. What if movies, some scene is shoot in India? I have told Riddhiben that is special cases on the basis of fact. It needs to be checked what amount proportionate need to be taxed. So there is no specific rule. I cannot answer that. On the basis of the fact of the cases, government or department will decide how much income we need to tax. Do not worry, this kind of question would not going to be asked in the examination because these are specific case-based questions. Aditya is asking, sir, sportsman, politician, and filmmaker should pay tax. I've told you, students, how can I answer these kind of question? There is no sportsman, politician, filmmaker word in our income tax. They are individual HUF, AOP, BOI, firm, etc. Or they are resident, ordinary, not ordinary, non-resident, etc. So if their income is not exempted, and if they do fall in this resident or income arise concept, they need to pay tax in India. So I am going to discuss with you the provision of interest. Suppose there's a non-resident who is outside India, of course, and he is receiving royalty income or he's receiving interest income or is he receiving fees from India. Now, technically, the basis of paying royalty must be that he has provided some kind of lease or some kind of patent, etc., against which he is receiving the royalty outside India. Interest, he must provide any kind of loan in India. So, against which he is receiving interest as an income. And if you are receiving fees, that means you have provided any kind of service, whether technical, professional, against which you are receiving fees from India because you have provided some kind of services. So the provision says if this payment has been made by Government of India. Government take anything on lease or any patent and against which government is paying royalty to this non-resident. Either government is paying royalty or interest or fees, or either any other person, resident or non-resident, is paying royalty, interest or fees to this non-resident. Suppose Mr. A. So if any non-resident receiving royalty, interest and fees in response of lease, loan or services provided into India, and if the payer is our government, then these payments will always be regarded, whether it's royalty, interest or fees. These payment will be regarded as deemed to arise from India. Always. Fixed rule. So that means in case of non-resident, whatever amount of royalty, interest and fees he will receive, he needs to pay tax on it. But if it has been paid by other than government, resident and non-resident, then we have to see whether that loan, lease or services, if this has been used in India by the payer, if that has been used in India, then the royalty, interest or fees received by non-resident for the purpose of non-resident, that would be regarded as deemed to arise. And that is going to be taxed in the hands of non-resident. But if these loan, lease and services not used in India, then not deemed to arise. Let me tell you how. Suppose a resident has taken 50 lakh rupees loan from this non-resident. He utilized this loan of 50 lakh rupees for his business, which is in India, for his factory, which is in India. And then he pay interest on this loan. So in that case, you can see this 15 lakh loan has been used in India for the purpose of business, etc. So the interest, whatever he is paying to that non-resident, will form an income deemed to arise from India. In the hands of non-resident, he needs to pay tax on it. Suppose this 50 lakh rupees of loan, he did not utilize in Indian factory. He has also factory in Sri Lanka. He utilized this loan of 50 lakh rupees in his Sri Lankan business factories. So in that case, that loan has not been utilized in India. So the interest paid by this resident is not going to be income deemed to arise from India. So non-taxable in India. If suppose 20 lakh rupees loan used in India, 30 lakh used outside India, then the interest proportionate to that 20 lakh rupees need to be considered as deemed to arise in India in the hands of Mr. A. As simple as that. So that are the three cases which has been elaborated in detail over here. So there are definition of royalty, the interest provision, if paid by government, always deemed to arise. If paid by other than government, etc., then you have to read these provision and the diagram I have made for you. Understood? Point number 8, that is for your homework. There are gift provision, and that is also going to be discussed in detail in case of income from other sources. But you can just read it out. The summary of the royalty, interest and fees, as we have discussed above, the theoretical part has been, write it down over here. So these were the provision of income arises or deemed to arise in India. Now I have told you that there is a concept of income received or deemed to be received, and it will not take more than 3 or 4 minutes. So all assessee are liable to tax in respect of income received or deemed to be received by them in India during the previous year, irrespective of the residential status or place of its accrual. We have seen that if income is your received or deemed to be received, it is taxable for all. Here is the diagram. And the good part, all these three examples you would be able to understand when you will read these respective chapter. So contribution in excess of 12%, that is a part of your salary chapter. I would be able to make you understand why this is deemed to received under salary head. 80 CCD deduction is under our deduction chapter. So that is going to be referred under deduction provisions. And the RPF contribution also is a part of salary topic. So these point we will discuss under salary head. So these were the provisions what we have discussed. Now we will discuss illustration for incidence of tax. Then there would be of course story and MCQs also. And always believe me, this is actually I have experienced practically. At least if you are able to revise every topic twice, that will definitely going to make you wise. And this wise person is going to be a wise CA soon. So revise twice. That's my advice to make you wise. And it's theoretical as well as numerical I'm talking about. You have to revise your numericals also at least twice. If you solve those practical twice, that will really going to make provisions very easy for all of you. Let me see if there's any query. Then we'll move on to the questions. Got it. Okay, well done. Chalo. Now moving on to the questions. So illustration 1, 2, 3, and 4 has been done, student. Now moving on to illustration number 5. That is for incidence of tax, page number 2.17. This is. From the following particulars of income furnished by Mr. Anirudh pertaining to the year ended 31st March 26, compute the total income. And 3 categories have been given. You have to answer every income, whether it's going to be taxed for ROR, RNOR, or NR. Okay, the first is short-term capital gain on sale of share of an Indian company received in Germany. So this 15,000 is a gain on sale of share of an Indian company, but received in Germany. So now you have to answer whether this is going to be taxed for ROR, RNOR, or NR. In whose head this 15,000 is going to be taxed. So we have seen that if you receive dividend, interest, or if the asset belongs to India, and if you transfer it as a capital gain, that is going to be treated as deemed to arise in India. So this 15,000 is going to be taxed in all of these 3 categories individuals. Clear? Dividend from a Japanese company received in Japan. Chalo, iska batao. In whose hand this 10,000 is going to be taxed? Second point, B point answer. I want to know the B point answer. Let me see who is going to answer. Only in ROR, students are saying. All are taxable in B point. Who is saying? Neeraj is saying. Pooja is saying ROR. Only ROR case. Anil is saying. Riddhi Ben is saying ROR. Shalini Gupta is saying ROR. Okay, Shrin is saying ROR. Mustafa is saying B ROR taxable. Saipa Viral is saying ROR. Very good. Shamli did not answer yet. Dhanlakshmi is saying ROR. Chaitanya is saying only ROR. ROR. Well done. You have understood the provision, of course, because Japanese company received in Japan. So there is no information that anything has been arised in India or received in India. So not arise, not received, and also company is Japanese. So that means that is only going to be taxed in ROR. This is non-taxable, non-taxable. Rent from property in London, deposit in a bank in London. Properties in London, amount technically received in London because deposit in a bank in London. Later on, remitted to India through approved banking channel. So what I have told you, this remitted concept you have to ignore. Don't read this line. This is just to make you confused. So I have just removed this line. Don't read it. So now just answer me on the basis of this information. Rent from property. As soon as you will read that remitted provision, you will be tempted to solve this question wrongly. So when you see any income on which remitted, brought or sent has been written, just ignore it completely. You can cut it out. So now the remaining part will decide the treatment. So rent from property in London, deposit in a bank in London. So in whose hand this 75,000 is going to be taxed? ROR, not applicable. Somebody, why Kuldeep, you're saying non-taxable? Why? The remitted part, we do not need to do anything. But after cutting the remitted part, we have received rent from property in London, deposit in a bank in London. On the basis of this information, we have to solve the question. Not applicable is wrong answer. Not applicable for all would be the answer when previous year or preceding year or earlier year income has been given. This is current year income, 75,000 rupees. Rent from property in London, deposit in a bank in London. Later on remitted, I have removed that line. That does not mean that we will not solve it with the rest of the information. This is going to be taxed. Majority of students has given the correct answer now. Correct. This 75,000 is going to be taxed only in the hands of ROR. Only in the hands of ROR. Not in RNOR, not in the hands of non-resident. Correct, Satish? रेमिटेंस इज इररेलेवेंट. उस पॉइंट को पढ़ना ही नहीं है. रेमिटेंस वाली लाइन को भूल जाओ. सोचो लिखा ही नहीं है क्वेश्चन में. अंडरस्टैंड? जस्ट इग्नोर इट, वाइप इट ऑफ, vanish it. Without that remittance information, you have to solve the question. ROR is the correct answer. More than 90% students have gave the correct answer. Very good. Achitya, correct. Very good. But this income which do fall. When you see the answer of this question, there is, you will see the some other income has been written over here. You can see that is 52,500 has been written over here. Why? Because this income does fall under income from house property. And when we will read this income from house property chapter, there is a 30% deduction provided. Whatever rent you receive, 30% is a deduction, fixed deduction, which has to be reduced in every case. So out of this 75,000, we deducted 30%. You must be thinking what is happening. So do not worry about it. This is the provision of income from house property. So when we will read that chapter, you will understand why we are doing it. So in the solution, they have already done it, but this is going to be discussed in income from house property. So whenever there's a building rent provision has been given, you have to deduct 30%. Clear? So after deducting that, the remaining income would be 52,500. Okay. Dividend from RP Limited, an Indian company. Now, dividend from an Indian company would be income deemed to arise in India, and this is going to be taxed for all. Agricultural income from land in Gujarat. इसका क्या होगा? What do we need to do with this? That is an exempted income. An exempted income would not form part of my income. You can see non-taxable. Non-taxable, non-taxable, non-taxable because it is exempted. Done? That was illustration. Now you can see the house property concept note has been rounded. A 30% reduction we have to give it. So rent received is 75, 30% deducted, balance is 52,500. Now one more illustration, the huge one we are going to discuss. Illustration number 6. Okay, this is simple. This is your homework. Illustration number 6, you can do it yourself. Now illustration 7, what we need to solve. In that illustration, every kind of income has been included. Okay, note 7 also. This is also for your homework. I guess 8 is the last illustration. The last one was the huge illustration. What? Yes. This is one. This one we are going to solve. Let me see if there is any query before it. No query. You have given all the correct answer. Very well done, students. High five from Wi-Fi. Shireen also correct. Shalini also correct. Riddhi Behan also correct. Anil also correct. To all, Pooja, Prerna, Kuldeep, Adil, Nagaraj, exempted, very good. Pooja, Shah, Miss Shaikh, Munna, correct. Aishwarya was also correct. Taisomai, it's correct. Kuldeep, correct. Miss Tiwari, Radhesham is saying, sir, agriculture income will not be taxable under partial integration. It could be taxable, but tax liability has not been asked in the question. In this question, only you have to calculate your total income. So agriculture income would not form part of your total income because that is exempted. But for the purpose of tax liability, that integration could be possible. But in this question, because tax calculation not required, that's why we have not considered it anywhere. Okay, now the next illustration number 8. Compute the total income in the hands of an individual aged 35 years. Being a resident and ordinary resident, of course, in all three categories, we have to find it out whether it's going to be taxed or exempted. One by one, I will explain and we will discuss it. Interest on UK development bonds. 50% interest received in India. UK development bond. That means those are outside India. And 50% of interest received in India. So in the hands of ROR, NOR, or NR. I don't have space over here. ROR, NOR, NR. So interest on UK development bond, 50% interest received in India. So can you tell me how much is going to be taxed in the hands of ROR? Full 10,000. Because it does not matter in case of resident and ordinary resident how much has been received in India or arise. In case of ROR, full income is going to be taxed always. Yes, in case of NOR, it would be 50%. That means 5,000. And for NR also, it would be 5,000. Clear? Income from a business in Chennai. Chennai is in India. 50% received in India. How does it matter? If income arise in India, that is going to be taxed for all. Arise in India. So received 50% in India or not received anything does not matter. So this is going to be taxed for all three categories, 100%. This is 50%. This is 10,000 was full for ROR. For NOR, it was 5,000. And for NR, it was 5,000. Second category, taxable for all. Now, short-term capital gain on sale of share of an Indian company. Again, it is an Indian company. Received in London. How does it matter? Deemed to arise in India. Taxable for all. Dividend from British company received in London. Company is British company. Received in London. So that is only going to be taxed in case of ROR. Not in NOR, not in NR. Long-term capital gain on sale of plant at Germany. 50% of gain are received in India. So again, in case of ordinary, full taxable. and 50% is received in India. So in RONOR and NR, in both cases, 20,000 taxable. Income earned from business in Germany, which is controlled in Delhi, 40,000 is received in India. Now, this one is new one and this is important. All others are points we have already discussed in earlier example, etc. Now, read it very carefully. You have to answer this one. This is interesting. Income earned from business in Germany, which is controlled in Delhi, and 40,000 is received in India. So in case of ordinary, full 70,000 is going to be tax. Can you tell me how much is going to be tax for resident and not ordinary? NOR? RNOR? Because it is controlled from India, that means full 70,000 is going to be taxed in the hands of resident and not ordinary resident also. Because if business is controlled from India, in that situation, full amount is going to be taxed in the hands of resident and not ordinary resident. And how much is going to be taxed in the hands of non-resident in this case? Only 40,000 rupees, which has been received in India. Understood? In those points you have an issue, you can send it. We can discuss it later also. Do not worry. I'm just trying to make you understand how to solve this question. Now, profit from a business in Delhi. Now, business in Delhi. Then from where it manage, etc. How does it matter? If business is in Delhi, then income is arise in India. That means taxable for all three. Income from house property in London. Deposit in a bank at London. Brought to India, computed. Computed means that 30% deduction has been done. Brought India does not matter. When there is called rent from building, then we have to deduct 30%. If computed what has been written, that means already 30% deduction has been done. Now the question says income from house property in London, deposit in a bank at London, and that is computed. So this is going to be taxed only in the case of resident and ordinary resident. No other taxability in RNOR or NR. Interest on debentures of an Indian company. So Indian company is there, that means taxable for all of three categories. Fees for technical services rendered in India. So rendered in India means arise in India, taxable for three. Other things are irrelevant. Profit from business in Mumbai. So business in Mumbai, taxable for all three. Income from property situated in Nepal, received there and again computed. That means 30% deduction has been done. So property in Nepal, received there. Only taxable in case of ROR. I am not checking the chat box because there are multiple answers and there are simple questions. So if you have any query that you can send, I will check the chat box in the last. So query I will answer. Now this was the point we were discussing. Past foreign untaxed income. Now this is the thing not going to be taxed anywhere. Past foreign untaxed income brought to India, etc. No treatment. This is not applicable for anyone. Understood? Income from agricultural land in Nepal. This is not agriculture income for our country. Okay? Received there and then brought to India. So brought does not have any effect on my example. So agriculture income in Nepal received there. So going to be taxed for ROR. Non-taxable for RNOR and not for non-resident. Few points left. Income from profession in Kenya. Kenya is outside India, which was set up in India. Received there, but spent in India. How does it matter is spent? Received there. Set up in India. That means for ROR, full value taxable. For RNOR, full taxable because set up in India, control from India. For NR, non-taxable. Gift received on the occasion of wedding. So this is a point of income from other source, and on marriage, if you receive gift, that is exempted. So this is not the part of chapter 2. This is the income from other source part. So you can skip this point. This is exemption, and you will come to know when you will read income from other source chapter. Interest on saving bank account in State Bank of India. Arise in India, taxable for all. Income from business in Russia, controlled in Russia. So taxable for ROR, no taxability for RNOR or NR. Dividend from Reliance Petroleum Limited, Indian company, automatically taxable for all. Agricultural income from land in Rajasthan. This is going to be exempt. We have the solution. You can see the solution. If there's any confusion, you can go through with this example again. And you can ask me if you have any problem in any of the point we have discussed till now. So let me see now if there's any query which is relevant for our purpose. Lot of queries. It will take 2-3 minutes me to check all chats. Okay, Shamli, Sharma, no queries. Well done. Mustafa, I believe there should not be any taxable. Mustafa is asking something. Meenu, Hina, why in NR 40,000 only? Because control in Delhi, then why not full amount? Why not to NR in Kenya? Look, in case of non-resident Hina, only two incomes are taxable. One is arise in India and one is received in India. If it is control from Delhi, that is applicable for RNOR. For NR, the income should be received in India or arise in India. So control does not taxable anything in the hands of NR. And you can see in this point, only 40,000 received in India. So we tax that amount. Control is irrelevant for the purpose of NR. NR in Kenya point was set up in India. So control in India. So that's why also, because control from India, so we'll tax this 5,000 in both cases, but nothing is going to be taxed in case of non-resident. Mustafa is saying, I understand whole question, so no queries. Very good. Okay, now let me see in the general section, is there any query? More than 96 message, 78, 78. Student, there are a lot of messages for the answers are there. So if I miss any query, you can send me right now. So I would be able to see, because a lot of chat was there. So I won't be able to, maybe I'm not able to see your queries. So you can send it to me. I'll solve that question for you. Everything has been clear. Hina is saying, okay. Theoswami is saying illustration 8 in solution, they deducted section 80 TTA. So that was after the solution. There's a deduction in section 80 TTA for bank interest that you will going to study in chapter 6, I guess, deduction. So I have did not take any. You just need to understand this question till over here. Gross total income. Deductions part we did not discuss yet. That's why you have to skip it. So last session C line I have in doubt. C line, last station C. What is C in this? Which one you are talking, Aditya? Illustration number 8 you are talking? And what is this C line? I don't get this. What is this C line? Kindly write it down, the illustration number and the exact confusion. Nagaraj is saying 7th. 1, 2, 3, 4, 5, 6, 7. That is profit in from a business in Delhi, you are asking, Nagarjun? Nagaraja? 7th is profit from a business in Delhi. Is your query? This one is your query? Nag Raja, then I can take this. Seventh illustration you want to ask. So I have given that illustration for your homework. You can try it. We will discuss that illustration in the next session. Illustration 5, you can try it. Aditya, we will discuss that illustration. Illustration 5, let me see what was that. 5 illustration. In C point, rent from property in London, deposit in a bank in London. What is your query in this? Look, the remitted, the brought information you have to skip. Now, if we skip that brought information, then whatever is left is rent from property in London, deposit in a bank in London. So no received, no arise in India. So that income is only going to be taxed in the hands of a ROR. 30% deduction provision income from house property. After that, the taxability is 52,500. Sorted. SIPA 10K has been deducted due to deduction part, but that we should not discuss right now. We have to calculate only gross total income. That deduction point is going to be discussed after deduction chapter. That would come later. Illustration number 8, dividend from British company received in London. So Harivansh, in this example, British company dividend received in London. So is there anything arise in India? No. Is there anything received in India? No. Is there any control from India? No. So that means that income is going to be taxed only in the hands of ROR. I hope it's clear now. So it's now a small story time for all of you. Then we will close our session. Till that, you can also send your queries. Story will be in Hindi, a very small story for all of you. तो एक बारी क्या हुआ, एक बहुत बड़ा एक नदी थी, एक रिवर थी, वहां पर बहुत सारे फ्रॉग्स रहते थे, फ्रॉग्स मेंढक। ओके, तो एक बार बारिश में वो नदी सूख गई, तो सारे जो फ्रॉग्स थे उन्होंने डिसाइड करा कि हम दूसरी जगह रिलोकेट करते हैं, थोड़ी दूर एक और नदी थी, वहां जाकर हम रहेंगे। तो सारा जो फ्रॉग्स का पॉपुलेशन थी वो एक रिवर से दूसरी रिवर्स में शिफ्ट होने के लिए जा रही थी। चलते चलते रास्ते में एक बहुत गहरा गड्ढा था और बहुत ही डीप पिट था, उसमें दो फ्रॉग नीचे गिर गए। दो छोटे फ्रॉग थे, और फिर जब वो नीचे गिर गए तो बाकी सारे फ्रॉग्स उन्हें बचाने के लिए आवाज लगाने लगे कि अरे ये तो नीचे गिर गए हैं, इनको ऊपर आना है, इनके लिए हेल्प करो। बट वहां कुछ भी हेल्प करने के लिए नहीं था। वो जो दो फ्रॉग थे वो कोशिश कर रहे थे जंप कर कर ऊपर आने के लिए, बट दैट जो वो पिट था वो बहुत गहरा था। तो दे वर ट्राइंग देयर बेस्ट, बट वो ऊपर नहीं आ पा रहे थे। थोड़ी देर कोशिश करने के बाद जब ऊपर वाले जो फ्रॉग्स थे वो सब उनको एनकरेज कर रहे थे, एक टाइम के बाद उन्होंने सोचा कि ये तो पॉसिबल ही नहीं है, ये ऊपर आ ही नहीं सकते। तो वो आपस में बात भी करने लगे कि अरे अब तो बच नहीं पाएंगे, ये इट्स वेरी डिफिकल्ट, ये बहुत डीप है, यहाँ से बाहर आना इम्पॉसिबल है, हम इन्हें नहीं बचा पाएंगे। तो जो दो फ्रॉग थे उनमें से एक ने ये सुनकर बहुत ट्राई किया, लेकिन उसने फिर वो ट्राई करना छोड़ दिया और वो नीचे गिर गया। बट दूसरा जो फ्रॉग था, ये सारी बातें ऊपर हो रही थी, स्टिल द सेकंड फ्रॉग वाज ट्राइंग हिज बेस्ट। वो ट्राई करता रहा जंप करने के लिए, ऊपर आने के लिए, और बाकी सब चिल्लाते रहे कि ये बचेगा नहीं, पॉसिबल ही नहीं है, इम्पॉसिबल है। सब आपस में बातें कर रहे थे, और वो फिर भी ट्राई करता रहा करता रहा करता रहा, और बहुत देर ट्राई करने के बाद वो बाहर आ गया। तो सब लोगों ने बहुत एनकरेज करा कि वाह तुम बाहर कैसे आ गए, जो दूसरा वाला था वो तो डेथ हो गई, वो तो गिर गया नीचे, बट तुम बाहर कैसे आ गए। तो जो उस फ्रॉग जो बाहर आया था, उसका जो एक दोस्त था, उसने कहा कि ये डेफ है, ये सुन नहीं सकता। तो वो डेफ था, तो उसको ये फील हो रहा था कि जब ऊपर लोग बातें कर रहे थे स्टार्टिंग से लेके एंड तक, तो मे बी वो उससे निकालने के लिए बातें कर रहे थे। वो उनका ये नहीं सुन पा रहा था कि लोग उसे डिस्करेज कर रहे हैं, वो लोग ये बातें कर रहे हैं कि तुम नहीं आ पाओगे। उसे लगा कि सब उसे एनकरेज कर रहे हैं ऊपर आने के लिए, बिकॉज वो अपने ऊपर बिलीव कर रहा था कि आई कैन डू दिस। तो वो ट्राई करता रहा करता रहा करता रहा और ऊपर आ गया। जो दूसरा वाला था वो सुन रहा था। तो जब उसने सुनना शुरू करा कि सब लोग ये कह रहे हैं कि ये नहीं हो सकता, दिस इज नॉट पॉसिबल, ये कर ही नहीं पाएगा, ये ऊपर नहीं आ पाएंगे, तो वो दूसरों की बातों से अफेक्टेड हुआ, डिस्करेज हुआ, और उसने कोशिश करना छोड़ दी। सो वो द मोर द स्टोरी कि आपको दूसरों पे फोकस नहीं रखना। बिलीव इन योर सेल्फ। जो भी लोग आपके बारे में नेगेटिव बात है, मे बी वेन यू स्टार्ट द जर्नी ऑफ सीए, आई बिलीव ये कुछ लोगों ने, रिलेटिव्स ने, दोस्तों ने कहा ही होगा कि बहुत डिफिकल्ट होता है, तुम नहीं कर पाओगे, मत करो, मुझसे भी कहा था। सो डू नॉट बिलीव ऑन दोज पर्सन इन दिस लाइफ। एक ही इंसान पे ना सबसे पहले बिलीव करना है, वो है हम खुद। सो इफ यू थिंक यू कैन डू इट, आई प्रॉमिस यू कैन डू इट। आई वॉज अ वेरी एवरेज स्टूडेंट ऑफ माई क्लासेस। अपने स्कूल टाइम में बहुत ही एवरेज बच्चा था मैं, एंड बट व्हेन आई डिसाइडेड कि मुझे करना है, एंड एग्जैक्टली इट हैपेंस व्हेन आई स्टार्ट थिंकिंग अबाउट डूइंग दिस, इवन माय डैड सेड कि मत करो, बहुत डिफिकल्ट है। मेरे सारे रिलेटिव ने कहा तुम्हारा तो हो ही नहीं सकता, बिकॉज पढ़ने में दिमाग ही नहीं था। बट मुझे वही चीज लगती थी कि मुझे लगता था मैं कर सकता हूँ, आई वॉन्टेड टू मेक माई करियर। मैंने किसी की नहीं सुनी, मैंने कहा मैं अपनी पढ़ाई करूंगा, एंड बिलीव मी, ये बिल्कुल हो सकता है। तो जब भी लोग आपको डिस्करेज करते हैं ना, उन लोगों से तो दूर हो जाओ, बात ही करना बंद कर दो, बिकॉज दैट अफेक्ट्स यू। So believe in yourself, and I promise you definitely can do this. Anyone can do this course. Just be sincere, do sacrifices, discipline। एक अपना रूटीन बनाइए पढ़ने का, उसको स्ट्रिक्टली फॉलो कीजिए, वो बहुत इंपॉर्टेंट है। यू हैव टू फॉलो वेरी स्ट्रिक्टली ऑफ योर रूटीन। कॉम्प्रोमाइजेस मत कीजिए पढ़ाई के साथ, एंड यू विल बी चार्टर्ड अकाउंटेंट। लाइक कितने सारे बच्चे हो तुम लोग, तो कितना अच्छा लगेगा ना, ऐसा लिखा होगा सीए हरिवंश, या फिर लिखा होगा सीए नागराज, या सीए थियोसामी, सीए संतोष, सीए। कितना अच्छा लगता है व्हेन यू प्रीफिक्स दिस नेम, सीए ऐश्वर्या, सीए पूजा, सीए। तो ये वर्ड बहुत ही इंपॉर्टेंट है, एंड दिस प्रोफेशन रिक्वायर्ड ओनली वन थिंग, एंड दैट इज योर डेडिकेशन एंड फोकस। सो प्लीज revise the provisions what we have discussed today. Practice your illustration, and in the next session we will discuss all the concept of chapter 1, chapter 2 once more, with the question, MCQs, etc. Let me see if there is any. Yes, Shalini could be CA. Shalini, you would be, you definitely going to be CA. Mustafa, thank you sir, engaging session. That quote would go and दीजिए। प्राप्ति सुधी मंड्या हो, योर कोट इज गुजराती, गुड डे, वेरी गुड डे टू ऑल ऑफ यू। मीनू इज सेइंग amazing story, play deaf and dumb from negative thoughts. Exactly, you have to ignore them, you cannot fight with them. If you try to fight with the negative people, you will waste your time. Let them say whatever they are saying. Believe in yourself, say to yourself, I can do it, I will do it. I'm still listening to the statements. Let me see any other. Sir, I have doubt in illustration. How to become master? Practice is the only thing, Aditya. You will practice more, you will be the master. Okay. Anyone else query? All clear? Okay. Thank you. Thank you. Thank you. Thank you. Thank you. Anything other than thank you? Harivansh, interesting class. Any other students is there to ask any query? You have to learn and work on yourself. Exactly that will be what is required by this profession. CA Adil, of course, CA Anshul, of course, CA Ajay, CA Urmila, CA Siddhi, CA Vikas, you all will be CA. Okay, so I guess Nisargji, there is no more query from the students, so can we close the session?